Welcome back, listeners, to another episode by Proinvestor AI. Today, we'll dive deep into the Q2FY25 earnings report of Federal Bank, a renowned player in India's banking sector. At Proinvestor AI, our mission is to provide you, the investor community, with insights to help you make better investment decisions. So, let's get into Federal Bank's latest results and guidance to understand the potential ahead. Federal Bank delivered a solid performance this quarter. The bank's net interest income, NII, for Q2FY25 came in at approximately 23 billion rupees, marking a 20% year-on-year increase, which aligns closely with estimates. Their net advances grew impressively by 19% year-on-year, with deposits following at a 16% annual increase. However, quarterly growth in deposits was modest at 1%, pushing the loan-to-deposit ratio, LDR, to around 85%. Management has assured investors that deposit growth will soon match the pace of advances growth, showing confidence in the bank's liquidity position. Another strong point in Federal Bank's performance was the net interest margin, NIM, reported at 3.12% for the quarter. While slightly lower than the previous quarter's 3.16%, this minor dip resulted from reclassification in income reporting. The bank's focus remains on maintaining healthy NIMs, which are expected to stay within a 3.15% to 3.25% range going forward. On the profitability front, profit before provisions and operating profit, PPOP, came in at 15.7 billion rupees, showing an 18% year-on-year growth. Provisions remained stable, with loan loss provisions for the quarter recorded at 1.58 billion rupees. As a result, the bank posted a profit after tax, PAT, of 10.6 billion rupees, an 11% annual increase, surpassing the consensus estimate of 9.5 billion rupees. Federal Bank's asset quality showed further improvement, with gross and net non-performing assets, GNPA and NNPA, declining to 2.11% and 0.6%, respectively, and a 100 basis point increase in provision coverage ratio, PCR. Business outlook and strategic guidance. Looking ahead, Federal Bank is setting a strategic tone under new leadership. The management's focus areas include enhancing NIMs, reducing operational expenses, and improving return profiles. They have announced plans to mobilize deposits, focusing on CASA, current account savings account, growth, which saw an increase in the CASA ratio to 30.1%. The bank's retail advances led the way in lending, growing 27% annually, with wholesale advances contributing a 17% year-on-year growth. Asset quality remains robust, with only a minor expected uptick in slippages. Federal Bank's unsecured advances are carefully managed, comprising just 4.6% of total advances. They are proactively working to sustain asset quality, especially in high-yielding products, and plan to expand incrementally based on macro conditions. Federal Bank's confidence in growth is underscored by their guidance for stable return metrics, maintaining a return on assets, ROA, of around 1.3% and return on equity, ROE, of 13.5% in FY25. The management is also optimistic about regulatory updates, including anticipated clarity on co-brand credit cards, which is expected by Q3FY25. The LCR, liquidity coverage ratio, stands strong at 115%, reflecting a well-positioned liquidity buffer. Federal Bank's performance in Q2FY25 showcases resilience and strategic foresight, driven by a commitment to sustainable growth, asset quality, and profitability. If you are looking to stay informed about Indian stock markets and invest with confidence, Proinvestor AI is here to guide you with insightful, data-driven investment solutions tailored for you. Don't forget, the complete earnings call is available on the Proinvestor AI YouTube channel. Head over there for an in-depth listen and stay tuned for our next episode where we'll cover more corporate earnings updates. Thank you for tuning in, and happy investing with Proinvestor AI.